Welcome back to South Florida Real Estate Update, and welcome back to Jeannine Henrion of Group 1 Mortgage. Delightful to have you here, as always.
Nice to be here.
You remember a couple of weeks ago, we talked to John Tasillo. He's the chief economist of Florida Realtors, and he said something that really struck me. He alluded to the fact that banks are reluctant to lend these days. Have you seen that?
Well, I think that banks are reluctant to lend compared to 2005 and 2006, where, you know, if you could fog a mirror, they'd give you $500,000. But to qualified borrowers, they are eager to lend, but they want to make sure they're not setting the consumer or themselves up for failure. Rates are, still very good. They are going up. The Federal Reserve is easing the quantitative easing.
Whatever that is, but it just means that we think the credit rates will be going up.
It means that the Federal Reserve was funding the market to keep rates artificially low. They've eased on that. So rates are starting to creep up a little bit, but for now, they're still historically low. We're going to see them continue to creep. Now is a great time to access low interest rates.
And to call to see how much credit might be available to a lender.
Well, and that's the wonderful thing at Group 1. We have a variety of resources that we can underwrite to. We are not just restricted to one set of overlays, which might be the case if you walked into your local bank where you have your checking account. We have probably 15 different resources, including our portfolio lender, who doesn't care so much about the Fannie Mae and Freddie Mac guidelines. They're just looking at, does this make sense?
When you say overlay, you mean the standards that a lending institution have for granting a mortgage.
Well, Curt, Fannie Mae and Freddie Mac are the primary purchasers right now of mortgage-backed securities. But each originating lender, the various sundry large financial institutions, have their own overlays depending on where their risk tolerances lie. And they're not all the same. So if you walked into the branch where you have your local checking and savings account, you may have a circumstance where you're slipping through the cracks in their guidelines and they can't qualify you. Well, at Group 1, that is never the case where you're just slipping through the cracks, because we've got 15 different resources that have different overlays.
More choices mean more chances to get a mortgage.
Absolutely.
So how is someone going to find out how much you qualify as a possible mortgage buyer?
Well, while rates are still low and while home prices are still very reasonable, the best thing to do is pick up the phone now and give me a call, and let's see how much you qualify for. We
see so much in newspaper and broadcast stories about how lending standards are tightening. But if you have a job and you have some money in the bank, you can still get a mortgage.
Oftentimes, that's true. Certainly, we're going to look at your credit. We want to make sure you have a credit report that shows you are inclined to pay your bills. We're also nowadays going to want to see your bank account. We want to make sure you have the financial wherewithal to close the transaction. And we're also going to be mindful of your debt to income ratio. We want you to have enough money left over at the end of every month to, pay for electricity, buy milk and eggs, live your life. We're not going to qualify somebody who's making $2,500 a month for a $2,000 a month housing expense.
And they can find out by giving you a call.
The best thing to do is give me a call.
Jeannine Henrion, thank you very much. Group 1 Mortgage, thank you for being here on South Florida Real Estate Update.
My pleasure to be here.